and it is heading for lows that we haven't seen since the 08-09 crisis.
Hey guys, welcome back to the channel. Today we have the CEO of ARK Invest, Cathie Wood, on where she believes the crypto market is moving. Wood says that Bitcoin has finally recovered its 200-week moving average and that it's comforting to finally see some stabilization. BlackRock and Coinbase have recently announced a partnership, and Wood believes that this is more proof that cryptocurrency has become a new asset class. This new development may have been caused by demand pull and institutions wanting to participate in the crypto space, but they had no efficient way to do so. Let's listen to Cathie Wood as she talks about the improvement of the current crypto industry. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I know that this fear that inflation at 7%, which is the CPI right now, on a year-over-year basis, is getting embedded into the system because wages are rising and so forth. So what we're seeing on the monetary and fiscal front right now is effectively significant tightening already. On the monetary front, we've seen money growth go from 27% to 13% recently. But if you look at it a little more closely and in a shorter term time horizon, we're down to 8% growth on a 3-month basis, 6.5% on a 2-month basis. And we believe that money growth will continue to slow quite significantly, especially if the Fed does raise interest rates. Now, we wouldn't be surprised to see the interest rates go up in March. Many people, after today's employment report, are beginning to think that 50 basis points is the number, that the Fed will basically telegraph that it means business and that it's going to head inflation off at the pass. They may do that. If they do, however, we think the stars are aligning in such a way that they will get the message very quickly that they don't need to do much more. On the innovation front and on market indicators, cryptocurrencies, Bitcoin, Ether, they have corrected with the equity markets. More and more hedge funds are involved in them. So when the market corrects, we do see higher correlations these days, although over a full market cycle, the correlation between crypto assets and any other asset is extremely low, which means for diversification purposes, crypto is a very interesting asset. In our Big Ideas 2022, you will see how we break out crypto. Our understanding is evolving. We are able to describe it in 3 ways: a money revolution, a financial revolution, and a next generation internet or metaverse revolution.
A study created by ARK Invest advises on how to invest in crypto, whether you're more focused on decreasing volatility or increasing your Sharpe ratio. Wood feels that if everyone followed her method, it would dramatically increase the value of Bitcoin. The only issue is there is a large illiquid supply of people who hold Bitcoin and never sell. This restricts the flow of the digital commerce space.
What we are also focused on is that loss of purchasing power is feeding through to retail sales. So retail sales in the all-important December month were down 1.9% on the heels of a 0.2% increase in November. With inflation at 0.4, 0.5, 0.6%, those numbers, that retail sales number would, in real terms, taking inflation away, have been down 2.5%, and in November also down. So consumption is falling. You were also focusing on what companies like Facebook and Amazon are saying. Now, Amazon's sales, Amazon reported yesterday, its sales on a year-over-year basis we're up only 9%. Now, it was up against a very tough comparison. And I think on a 2-year basis, we've still got solid growth, but still 9% is even lower than the lowest point during the 08-09 crisis, which was 14.5%. True, Amazon is a little bit more mature of a company right now, but 9% I've never seen out of Amazon. And it was facing tough comparisons in the quarters prior to now, and we saw nothing like that 9%. Facebook is suggesting that for many reasons, its sales growth in this quarter will be somewhere in the 3 to 11% range. This is the lowest ever. It's never been in single digits. So Facebook has, we think, some competitive problems, but it did point to weakness in the retail sector, as did Google in its report. So consumption accounts for roughly 2/3, a little more than 2/3 of the U.S. economy. Retail sales are mostly on the good side, so that's about 1/3 of total consumption. The rest is services. So we look to the consumer sentiment surveys to give us a sense of where we're going from here. And if we did get another University of Michigan consumer sentiment survey, and it fell again to a new low, and it's lower than at any time during 2020, and it is heading for lows that we haven't seen since the 08-09 crisis. So the consumer doesn't like this loss of purchasing power. We know that the unemployment rate and the employment rate are working in the consumer's favor generally, but that usually is a prime determinant of how the consumer's feeling. But it's clear loss of purchasing power is top of mind. So let's go to market indicators now. Equities, as you know, they did move to an all-time high, but the internals of the market last year were not good. They were, I think I mentioned on the last In the Know, that the ratio of new lows to new highs was as high as it's been since 1999. And in 1999, it was the value stocks that were hitting new lows as everyone was racing into the internet. In this last year, it has been our kinds of stocks that were hitting new lows as value stocks were hitting all-time highs. And as you know, the right thing to have done during the late 90s, when that ratio behaved that way, was to move away from the new highs into the new lows. And I think the same is true today.
Wood has noticed that innovation is number one, as it usually is when leaving a bear market. There is currently no way to tell if we're exiting the bear market or if we're only in a trading range. Wood is delighted to finally see that leadership is now focusing on growth and innovation. Leaders are now concentrating on the future rather than the past, which is normally the route most passive and benchmark-sensitive strategies take. Wood is hopeful that these are signs that we are back on the right track and finished with recession and decreasing prices and currencies. What do you think of Cathie Wood's prediction for the future of the crypto industry? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.